it's turning out to be a rather strong day for Indian markets. Is it hot air? Is it short covering? That's anyone's guess. But it's good to see that there is a rub of green on Indian equity. So typically, if banks are leading the charge, you got to be with financials. The buzz on the street is do revisit Mahindra and Mahindra financials. Now, there are multiple factors why Mahindra and Mahindra financials in the near term has potential to outperform. Auto sales are down, but channel checks are indicating that auto sales for rural India are not down. Mahindra and Mahindra financials in the past has managed to grow higher than the industry average. The return ratios are quite impressive. They've diluted some equity, because of which the book value has come down. They have enough tier 1 capital. So in the near term, they don't need fresh capital. Also, Mahindra and Mahindra Financial has indicated 2 quarters ago that they plan to focus on the housing finance business. Housing finance business is a safe business. Markets and fund managers, they love companies which have presence in this business. So there are multiple triggers. The stock in a falling market has cracked by only 10%. So it is a better performing financial sector stock, so to speak. The other one is NTPC, Coal FSA, NTPC problem, Coal India problem. It will be sorted out maybe if not in this week, maybe by end of this month. But the real story for NTPC is that they are looking at expanding their capacity. They are planning to add about 13 gigawatt of capacity next 4 years. So we are staring at something like 3 gigawatts plus every year. The way NTPC works is, or the way the business model works is, the more capacity you add, the more money you make. The stock has done precious little in last 3 years. It's moved in this range of about 180 to 145. The OFS was a success. Institutional investors, they love the stock. At a time when it's too early to make a case that the real bull market is back, maybe it's time to hide into defensives. So there are triggers in the near term. The Coal FSA could easily give a 10-50 rupees spike to that stock. And if the defensive nature of the market is to be maintained, maybe there is a trade in there in the near term. The HULs and the ITCs of the world are expensive. The consumers are slowing down. Brand owners are also looking very expensive. So the typical defensive buzzword in this market is either utilities or pharmaceuticals. Pharmaceuticals are wildly expensive, which means you're only left with classic utilities. So I get a sense that in the near term, maybe there is some money to be made on when it comes to that stock.